Hello and welcome. You're watching Business Today Television. I'm Sakshi, Patra, and this is What's Hot, a show that focuses on the biggest buzz on the D Street. Well, after days of volatility, we are finally showing some strength on the markets. You can see 23,340 back on the screen. Across the board, all the sectors are hovering higher. So it's a broad-based rally that you're seeing in the markets today. Of course, led by sectors like real estate, even the broader markets that are up by over 1% each. PSU banks, banking as a whole sector. Then you're also looking at oil and gas and autos also trend higher in trade, but just within a few minutes of trading, we've seen some pressure emerge as far as IT and pharma are concerned. But still, it's a broad-based winning trend that you're looking at as far as the markets are concerned, and a lot has to do with the global sentiments turning positive after Donald Trump has talked about how he's holding off the fresh strikes that he had planned for Iran. And he's also hopeful that a deal with Iran would be signed soon. As a result of this, we actually saw a reflection on the oil prices. In fact, they have slipped on the Iran deal hopes as well. What we're also given to understand is that the Brent crude prices have fallen below $90 a barrel as well. Right now, even $89 a barrel, you can clearly see a 2% fall there at 88.6 is the current price at which the Brent crude prices are trending at. And this is the 2-month low level for the Brent crude prices as well. This is the second session in a week that we've seen that the markets are falling as far as the Brent crude is concerned. We've also seen that as a reflection of this, the oil marketing companies are in fresh focus in the markets back home too. So let's get a word in from our expert to help us decode what these fresh triggers mean for the markets and for the investors as well. We have Gaurav Sharma joining in from Globe Capital to share with us a fresh take on the markets. Warm welcome to you, Gaurav. Good to have you with us as always. How are you looking at these fresh triggers? There are also reports that are indicating a fresh 60-day of a ceasefire could be extended, and nuclear decisions could also be taken and discussions could be done around that as well. Lebanon could also be a part of the ceasefire agreement that could be done for the next 60 days as well. How are you looking at these fresh developments from around the world?
Very good morning to you, Sakshi. Thanks for having me today. Very fair developments. This is not just the news, this is the news that everyone across the globe is actually looking at. Everyone wants to hear, and ink needs to be signed soon because uh, the pain is there in everywhere, and the crude oil prices is having an impact all across the globe. It is denting the pockets of the poor, the middle, and the rich as well. So if the pact is signed quickly, I think we would further see a decline in crude oil prices, currently trading closer to 88.5 odd levels. I expect a level close to 84, 83 coming soon. It is quite likely today itself. But there are certain concerning elements also in the just about 40-45 minutes of trade so far. We have seen Nifty index opening with a gap of close to a 300 points higher and losing a third of its gain. That is one concerning element because if markets and the crude oil prices give a very clear reflection of what the exact situation is, the market should hold the higher levels, and they if they aren't holding, then there is something concerning and alarming going out there. In the previous occasions as well, whenever a peace pact or a peace talks were there, we have seen both sides resuming the bombardments on each other using heavy artillery, and that had actually uh, risen the question marks among investors and actually derailed the investment strategies so far. So still, I'm maintaining a very cautious approach. I'll still wait and watch for more clarity on it. Although Donald Trump have very clearly said that a peace pact is just around the corner, probably this weekend itself. But let us still wait and watch for some more time now.
Okay, got that. So I hope, viewers, you've understood what's the current texture like as far as the markets are concerned. But in case we have to understand from you, Gaurav, which are the pockets that are giving you confidence vis-a-vis the pockets that you will not still touch in the markets that are appearing vulnerable? What would those be?
So actually, we are having great amount of comfort within the pharma space. We are very going in very stock specific, although on that as well. Pharma being a segment that drives a larger chunk of its revenue uh, from uh, from overseas markets. It is benefited from the depleting rupee. We do not see any kind of a negative impact on the pharma space, even from the US India trade deal. Therefore, this is one space that fascinates us, and we are advising to our clients. Power equipments is another space that is doing really well.
Yeah.
A lot of FII inflow was seen in the power space in the preceding quarter. This clearly goes to show a global round of interest in this particular segment. We do uphold our bullish stance on it. Hitachi India, CG Power are among some of the better among the lot. Renewable energy is one thing that we are having a clear focus on. In the
Mm-hmm.
recent commentary by Prime Minister Modi, he has yet again emphasized on achieving the 500 gigawatt mark soon. So, when the government is having a clear focus and they will be benefiting and providing incentives and supporting that industry that has to perform. Therefore, these are certain segments that even in the stress time they have performed, they are holding ground, and they are more suited for even for fresh investments.
Okay, I'll actually try and understand from you how to go about the stocks that are reacting on the falling of the crude oil prices. OMCs, IOC, HPCL, BPCL are all up. We're also looking at aviation counters like Indigo that are rallying from a relief from crude oil. Would you be confident of betting here, or would you stay away?
See, this is the space that was worst hit, the most impacted ones, oil marketing companies. They are actually paying the entire stuff from their pockets. And if the crude settles, I think they'll be sooner benefited and the most benefited out of it. As far as aviation is concerned, they are actually, they what more to say about aviation? Just listen to what Indigo's chairman is commenting. They have changed their routes. They have margin problems. Commuters are either deferring their vacations or not going out just because of higher crude oil prices. They are struggling. The aviation companies are struggling with the aviation ministry to settle down on some prices issues. A recent 10,000 crore package. I don't think how long will it last. So overall, these two industries are the most hit.
Hmm.
Yet I will be maintaining a very cautious stance because, as I said in the previous commentary, that uh, things are not clear. And I firmly do not rely on what Mr. Trump is saying until it is finally done.
Okay, got that. Let's focus on some of the other counters that are in focus today. Vedanta is in focus today after a long haul and long wait. Finally, we have a date when the demerged entities will get listed on the stock markets. That's June 15th now. For all those investors who were eligible for the demerged entity stocks also to get credited to their accounts, they'll be now looking forward to as to how to look at this entire 5:1 play out for their portfolios as well. The stock is up by about 1 odd percent. What do you think investors should look at here?
Clear cut. We are maintaining a whole stance for Vedanta. One
Okay.
of our favorite picks from the middle pack. I would say from the past 3-5 years, this stock has been a multi-bagger. I've seen it rallying from 20 to 360 plus levels in a very short span of just about what 4-5 years. So this has created humongous value, and yes, we cannot miss the amount of dividends this company pays out, 7 to 8% annually, which is I think equal to the fixed deposit interest rates in some of the banks. So it is a very fine pick. Now the value locking unlocking is happening. One should hold on to the position. I think the kind of returns the stock has delivered over the past so many years, they are more likely to continue as the pedigree remains the same.
Okay, let's also focus on some of the other key stocks that are in focus. From the FMCG space, Dabur is in focus. This is because the USFDA has flagged a plant from Dabur and issued import alert on Silvassa facility. The regulator has cited data integrity maintenance lapses. Although they've allowed FDA to detain the shipments at US ports as well, although Dabur says that the responses were submitted to the observations and domestic products remain unaffected, at least for now. Dabur sees limited impact as far as their financials are concerned. They believe import alert applies to private label drug products, and the company says revenue impact is going to be insignificant. And the plant also continues with normal operations. No impact on the financial or operational activities is what they are saying, at least for now. We just wanted to highlight that news flow for you. But Dabur and the other FMCG stocks for you, how are you looking at it, Gaurav?
First, address Dabur specifically. Dabur as a company drives the most part of its revenue from India and the countries around the Indian subcontinent. The America business is very minuscule for Dabur, so therefore there is no meaningful impact on it. Yes, this is a negative development of a red flag coming in from a food drug administrator of a different company, different country as such. But considering the overall revenue, I don't think there'll be a meaningful impact, and that is why the stock is still trading half a percent higher. Now coming on to the entire FMCG pack, I am not at all bullish on the FMCG pack. The reason is I see their margins impacting in the forthcoming quarters with rising inflation, with rising the staple prices, the grains prices, the vegetable prices, and the oil prices as well. I'm talking about the edible oil here, food grade oil. They will have impact on the raw material. So it'll be very important to see how quickly and how well the FMCG companies are actually able to manage their raw material costs, because I see them mounting higher until the point they aren't passed on to the end user. There are difficult times ahead for the FMCG space.
Okay. Let's also focus on the capital market story. We have a brokerage report today on Motilal Oswal Financial Services, and the stock has also reacted onto the report as well. UBS has initiated coverage with a buy rating on the stock, setting the target price at 1100 rupees. That implies about a 38% upside from the current levels as well, and that's why you see a sharp 5% rally on this one from the current levels. Of course, UBS sees strong earnings growth ahead, and the AUM strategy that's driving the optimism for them as well. The re-rating potential that they continue to see, they expect the AUM for MOFSL to grow at a 21% CAGR growth, and the revenue growth is seen at 19% for them on a CAGR basis till FY29. The earnings projected to surge by about 22% CAGR as per them, and the shift towards wealth business to boost stability is something that they are betting big on at this point. How would you look at Motilal Oswal and the entire capital market story? We've seen remarkable returns on Motilal Oswal shares for investors, early investors onto the stock as well. But from the current levels as well, just like how UBS expects about a 38% rally, what should investors be really looking at here?
From the capital market space, the broking space, AMC space, uh, Motilal Oswal is a very big company and they are doing well. Their financials completely tell the entire story. The growth is there. They are continuously rising. The past quarter numbers were also pretty much impressive. Although slight hit on the profit figures were there due to some hit on the margins as well. I think they may witness some kind of a dull segment or maybe lesser growth in the upcoming 1 to 2 quarters. But taking a longer term perspective, the entire capital market space and Motilal Oswal as well looks very promising to me.
Okay. So even at this
I
stage,
am
should you
also
advise them to buy?
Absolutely, the stock is available at a reasonable corrective price now. They can consider buying it. I do not expect a flare of a return coming in, say a quick 20-30% in the stock price. But yes, over the medium to longer term perspective, the stock is more likely to take head towards its new highs, maybe by the end of the year.
Okay, got that. I hope that this has helped you out as well. Let me just focus on some of the other key stocks that are in focus right now. Of course, gold and silver prices have again edged higher after a couple of sessions weakness that we've seen, and we're seeing back the gold financiers up and about in the session today. How are you looking at gold and silver? Yet again, the key question was equity versus gold, at this stage, because we have seen a considerable cool off from higher levels on gold and silver, and even the equities are now just preparing themselves to get out of this range bound rate for a long time now. So where exactly and how should investors be moving on both?
So actually, this is a very different kind of a scenario going on with the
Mm.
precious metal nowadays. You must have noticed it. Yesterday, when we were asleep, the news came in that Donald Trump saying we will sign the pact soon for with Iran and in the war. And today we are seeing the prices rising. So the war is nearing to an end, and the prices of gold are rising. This is a very much inverse to what we usually see, uh,
Yes.
especially with gold prices being a safe haven investment. Now the safe haven demand is coming when we are nearest to establish peace talks. So that's a different situation, different
Mm.
financial. The demographics have changed, I guess, and talking specifically about gold prices, I still feel that they are more likely to hover in a range now, because we have already seen a very steep spike in the gold and silver prices. The range that I'm expecting is 135 on the downside and 165 to 170 on the higher side. Till these, the gold prices are within this range, I don't see a meaningful move coming in. This range needs to be breached, and I don't see it happening anytime soon.
Okay, fair point. I hope that this has given some sense to our viewers to understand what exactly should be the approach here. But let me also discuss some market cap based sectors, mid caps and small caps with you, and try and understand how are you looking at this fresh bout of momentum here. What are you going to be focusing now more on? Is it the large caps or the broader markets? What are poised to move forward first?
We are having a very focused approach in Sakshi. It is not the large caps or the mid caps or the small caps we are focusing at. It
Okay.
is a stock specific action that we are having an eye at, and of course sector specific indeed. As I've mentioned, that pharma is a comfort spot for us. We expect pharma companies to continue deliver the kind of growth they have delivered in the past 1 to 2 quarters going ahead as well. We are very much positive on the uh, power equipment space, power, not the power generating companies, but we are bullish on renewable energy space. We are bullish on companies that are into the business of maybe rectifiers, or the companies that are indulged in manufacturing of solar cells or maybe windmills. So these are some spaces that encourage us. It doesn't matter whether they have become a large cap company. For example, Power India, for example, it is currently at a 1 lakh crore MCAP. It is closer to becoming a large cap company now. So therefore, it actually depends on the business line and the performance. So that is the kind of stock specific approach we are currently maintaining.
Okay, got that. I hope that this has also truly helped you out in understanding how to approach this entire space. Let me also just draw your attention to the banking and financial space at large, Gaurav. We have seen inherent strength building up on the Nifty Bank. Private banks are also stepping up as well. PSU banks periodically have been rising from the time the government has taken steps as far as bringing back dollars is concerned. So the banking space has been doing some heavy lifting at this point. Are you positive on this, and how would you approach the sector at this point?
So actually, BFSI, banking space, financial world is the backbone of any economy. We are also bullish on this space. There are certain headwinds lying ahead. We are maintaining a cautious approach, very stock specific, not at all interested in the larger names that have provided comfort all throughout the year, something like an HDFC or ICICI. Rather, we are sticking with something like an SBI, Canada, Indian Bank, Federal Bank, City Union Bank. So it is actually a mix of what is able to actually deliver. So we are actually more concerned about their financials, the kind of numbers, lesser on NPAs. So these are
Yeah.
certain areas that we are precisely concentrating at, and we are actually very selective on it.
Okay, very selective on the same space as well. But I also wanted to understand from you when it comes to the foreign investors' approach to India as a whole, how are you looking at it when it comes to equity specifically? There's not been any relief on the equity foreign investors so far. It's only been the bond investors that have got certain relief from the government and the RBI. But how are you looking at that foreign money's approach towards India right now? Has the scenario changed at all for the better? We have also to find out that, some of the mega AI IPOs that are drawing foreign money globally is something that is just around the corner. So beyond that, do you see some liquidity come in? We are seeing SpaceX listing happen today. So all that money which was locked in, do you see some of that coming back to India?
So actually, firstly, let's address the bond thing. People have been little confused here, and they are assuming
Yeah.
that the bond relief was related to equities. No, it wasn't. It was a step taken by RBI and the government to stabilize the currency, the depleting currency, and to hold on to it, stop the decline of the Indian rupee against the dollar and other larger currencies. Therefore, the bond thing is very much separate from equities. Now, addressing your question of foreign money coming back to India, yes, a large chunk has gone out, and a larger still remains invested.
Mm.
I think 2.5 lakh crores is the outflow that we have seen in past couple of months so far as an outflow, but
Yeah.
a much larger chunk still remains invested.
Mm.
The good thing to look about it is that the Indians and the Indian companies, the institutions, are now increasing their stakes. So hence, going forward, we will be more driven towards and by the domestic investors. But yes, for a smarter growth, quicker growth in equities, foreign money needs to come in. Foreign investments, FIIs, FPIs needs to park. But as of now, there are no signs of this trend reversing in. So I think it will take some more time now. Rising US deposit rates, treasury rates attracts foreign inflows towards them and an outflow from the emerging equities. So this is the scenario there. The recent inflation numbers, the US inflation numbers were high. Very soon, Fed will also take a step, maybe in a month or two, to increase the rates there. And if that is done, again, we would see some kind of a sell-off. Meanwhile, let us wait and watch for some more time of some positive developments coming in. And if they come in, so we might, again, I would say that's a larger question mark here, see some, pause in the sell-off. As of now, I'm not seeing the foreign money coming in. I think a pause is also would be enough.
Okay, got that. Now, Gaurav, help us understand with a string of stocks, if you could name what has come onto your radar of late. Any key stocks from the sectors that of your choice that you did talk about, since you did say that this is a market where one has to be very stock specific. What kind of stocks should one be looking at right now? Where do you think value is to be had? Where do you think risk reward is pointing to a positive as well?
From that space, one of my favorite companies, we have recently released a report on it. The company is Bharti Airtel. It has tumbled down very steeply. We were actually waiting for this kind of a dip, which was not available in the past couple of months. Now it is there. We have released a report on the stock. We feel that after the recent numbers, the company crossed the 2 lakh crore mark for the first time in terms of revenue. Uh, just for the information of investors, Bharti Airtel drives just about 52% of its revenue from India from the mobility business. A larger part of their revenue is very much diversified. For example, about 29% contributes from the Africa business, 13% is the non-mobile business, and 6% is the Indus Tower business. We feel that this company is very much diversified in itself. A specific impact on any economy will not have a negative impact on this stock. Uh, at a 2257 ARPU numbers, the management still expects going forward these ARPU figures will improve. They are among the highest in the industry. There are a host of other factors that impress us. That is the home broadband space, touching a base of 4.2 million now, and crossing the 45 million of the home passes. So these are humongous numbers to look at. We find a great comfort in this company. Therefore, we have a buy rating on the stock, and we have suggested it to our clients. So, general disclaimer also that our clients would be having a position in it.
Okay, got that. I hope that this has helped all our viewers out draw a sense of what exactly should one be choosing at this stage. Thanks, Gaurav. Always a pleasure to have you with us to decode the market trends and to find out where exactly opportunity exists, even in volatile scenarios. Thank you so much for being with us.
Likewise, Sakshi. Thank you so much.
All right, viewers, we'll wrap it up on that note as far as what sort is concerned. But in case you are looking forward to getting an answer to the confusing questions around flex fuel, is E85 good for your vehicles, or is E20 continuing to be better? Is your vehicle compatible towards it? Why is India really looking forward to higher ethanol blended fuels? What would it mean for your mileage, for your own vehicles? Will you have to change your vehicles? All of those questions will be answered up next in a special edition. Stay tuned.
Three ships attacked in 3 days, all carrying Indian sailors. India-linked vessels are increasingly finding themselves in the crossfire of a widening maritime security crisis across West Asia. 3 Indian sailors have been killed in a US military operation to halt the tanker off the coast of Oman. The 3 Indian seafarers went missing following the attack on the Palau flag tanker MT Setebello and are now confirmed dead. The other 21 of the 24 crew members on board have been rescued. The deceased sailors have been identified